Yesterday, the European currency corrected in early trade but then resumed its downward movement. By the late North American session, buyers returned to the market, thus allowing the euro to stabilize in a sideways range. Data showed that the euro area annual inflation rate stood at 10.6% in October, slightly down from a preliminary estimate of 10.7%. The CPI report indicated an inflation cool down, which dampened buying interest. Although ECB members continue to push for further interest rate hikes in order to fight accelerating consumer prices, data provides proof of cooling inflation. That's why the euro's rally was limited. Yesterday, traders also received rather upbeat statistics on the US housing market, including reports on building permits and housing starts. Against this background, the greenback advanced against risky assets in the short term. But as I said, the euro managed to correct and stabilize. As for the British pound, the situation was quite similar. The autumn statement, the budget report, and the speech by UK Finance Minister Jeremy Hunt exerted pressure on the pound sterling, dragging it to local lows. Nevertheless, the British currency was able to recover, coming back to the sideways range. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It's bereft of any important releases except for data on British retail sales. Economists predict a 0.3% rise from September. If the indicator is above analysts' average estimate, the pound sterling will most likely gain value. Otherwise, the British currency will come under pressure again. However, I think that its decline is likely to be limited by the lower boundary of the sideways channel. In addition, traders may take notice of the speeches by Bank of England members. Today's news feed does not include any significant macroeconomic reports either from the euro area or the United States. Thus, trading is expected to be calm unless there are no political shocks. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, the level of 1.0384 serves as the middle of the channel, whose boundaries lie at 1.0323 and 1.0432. So it is worth focusing on these marks. A false breakout at 1.0384 will create a sell signal. In this case, the euro will slide to 1.0323 and then to 1.0226. At the level of 1.0226, I recommend going long on a rebound, counting on an intraday correction of 35-40 pips. If bulls are able to retain control of 1.0323, its false breakout will lead to an increase in the volume of long positions. If the price breaks above 1.0384 and tests it from the top down, the European currency will have a chance of gaining strong upside momentum, rising to 1.0432 and 1.0478. At the level of 1.0478, it will be possible to go short on a rebound with a view to catching an intraday correction of 35-40 pips. Short positions at 1.0432 or 1.0384 can be considered only amid a false breakout. Speaking of the British pound, the market volatility is about 200 pips. I suppose that the 1.1857 level, the middle of the channel, will act as support. If the price goes down and forms a false breakout at this mark, a buy signal will be generated. Moreover, if the price breaks above 1.1947 and tests it from the top down, the volume of long positions will increase further. Thus, the pound sterling will rise to 1.2021 and 1.2078. At these levels, it would be a wise decision to go short on a rebound, counting on an intraday correction of 45-50 pips. Short positions at 1.1947 can be opened in the event of a false breakout. An alternative bearish scenario suggests that the price will break below 1.1857 and test it from bottom up by midday. In this case, a strong sell signal will bring the British pound down to 1.1768 and 1.1714. Good luck and have a nice weekend.